S&P 500 and Nasdaq seems to have renewed their bullish tendencies over the past week, while Dow Jones seems to remain confined in a sideways motion. In this report, we are to discuss the Fed's stance, upcoming US financial releases, the Meta EU spot, and for a rounder view, finish off the report with a technical analysis of Nasdaq's daily chart. We note that Fed policymakers seem to hesitate to start cutting rates despite recognizing the need to cut rates before year's end. Should we see more Fed policymakers coming forward and supporting the idea of maintaining rates high for longer, we may see the market being forced to reposition itself and thus could provide some downwards pressure for US stock markets. Hence, we tend to highlight the release of the Fed's June meeting minutes later on today. The document is expected to be scrutinized by market participants and analysts alike in search of clues regarding the bank's intentions. Should the document show that Fed policymakers are still hesitant to start cutting rates or are even predisposed to keep rates high for longer, we may see US stock markets losing some ground. On Friday's early American session, we note the release of June's US employment report. The non-farm payroll figure is expected to drop, the unemployment rate to remain unchanged, and the average earnings growth rate to slow down. Should the actual rates and figures meet their respective forecasts, the indicators would be aligning towards implying a possible easing of the US employment market, which in turn may add more pressure on the Fed to start cutting rates, given its dual mandate to keep inflation low and steady, yet also at the same time promote maximum employment. In such a case, we may see US stock markets getting some support, yet we have to note that the actual rates and figures of the release tend to differ substantially from forecasts, yet uncertainty is at a high level. On second note, we would also like to mention the release of the ISM non-manufacturing PMI figure for June later today, which is to gauge economic activity for the sector. We tend to note that the issue arising from EU accusing Meta for breaching European competition regulations. According to CNN, the company is accused that its subscription for no ads forces users to consent to the use of their personal data and fails to provide them a less personalized but equivalent version of Meta's social networks. Should the accusations be confirmed, as they are still at the provisional stage, the company may be fined up to 10% of its worldwide revenue, i.e. $13.5 billion. Yet the issue is wider than Meta as such, as the EU announcements come a week after the EU Commission accused Apple of breaching their EU Digital Markets Act by preventing app developers from freely directing consumers to cheaper services. The regulators are still also investigating Google parent Alphabet under the new law. We see the case for the tensions between the EU and big tech companies to intensify, and if actually so could weigh on somewhat on their share prices given the size of the European market. US 100 renewed its bullish tendencies over the past week, aiming for the 20,100 resistance line, marking a record high level for the index. We tend to maintain our bullish outlook for the index as long as the upwards trend line guiding Nasdaq since the 19th of April remains intact. Furthermore, we also note that the 20, 100 and 200 moving averages are well pointing upwards, supporting the bullish outlook for the index. Also, the RSI indicator remains close to the reading of 70, implying a strong bullish sentiment among market participants for Nasdaq. On the flip side, the RSI indicator may also be implying that the index's price action has reached overbought levels and may be ripe for a correction lower. At the same time, we also note a relative difficulty on behalf of the index to break the 20,100 resistance line. Should the bulls remain in charge of the index's direction, we may see it breaking the 20,100 resistance line, moving into uncharted waters, and we set as the next possible target for the bulls the 20,800 resistance level. Should the bears take over, we would require the index to initially break the pre-mentioned upwards trend line, signaling the interruption of the upwards movement, and continue to clearly break the 19,470 support line, taking aim of the 18,900 support level. Those were the top financial stories for this hour. From all of us here at Iron